why and how to set up an LLC or trust for an investment in digital assets. First off, we're going to have to figure out, do you meet the gift tax threshold in your jurisdiction? Here in the U.S., that's going to be $12.92 million for an individual or $25.84 million for a married couple. Okay, so between you and your spouse, you both get that lifetime gift tax threshold. And you might be asking, why does that matter? Well, if you're going to gift your assets into a trust, anything above that amount is going to cost you 40% in taxes, which is steep. So this is where you're going to decide whether you're going to set up a trust prior to the liquidity event, or if you're going to set up an LLC and just move it there so that you can set up an account and have the tax advantages that provides. If you believe that your holdings of digital assets are going to exceed that amount when your liquidity event occurs, or when you transfer those assets into that entity for your estate plan, it probably makes sense to go ahead and spend the $3,000 to $10,000 now to go ahead and set that structure up. If you're less than that amount, like again, it's 12.92 for an individual, 24.84 million if you are married, then you could probably get away with, just moving those assets into an LLC. And you can set that up for $300 to $500. Depends on who you work with and the jurisdiction that you're going to get it set up in. You probably want to set it up in Wyoming, maybe Montana, maybe South Dakota, for any of those structures, whether it's an LLC or your trust. Just depends on, again, having those negotiations and discussions with the attorney. So let's say you decide, you're going to set up an LLC because you're not going to meet that threshold, and you just want to move your assets in there prior to the liquidity event and be able to set up an account with Caleb or Brown and a bank account so that you can liquidate those funds and use them for whatever types of investments or upgrading your lifestyle, whatever you want to do with your capital gains, right? So that's the other piece of this. You need to understand the tax ramifications for cashing out. So have a plan, decide what amount you're going to cash out at what price point so that you know the exact amount. Again, that kind of goes back to, are you going to have a certain amount of assets? But your total amount of assets is really what's going to be moved into the trust, whether you've liquidated them or not. So make sure you understand that piece. It's all of your investments that's going to be moved into that estate, not just the portion that you cash out.